Hey traders, this is Blake Morrow with Trader Summit. It's Friday and I got Mr. Jim Welsh here to break down everything that's happening in the markets. We've seen some risk off today, some volatility, and Jim, what do you make of all of this movement in the market ahead of tariff weekend?
Yeah, and weak. No, I think again, as we've talked really since the beginning of the year, that this was all going to be what we should expect to see, and the markets are prone to any new announcement from President Trump, and we saw that yesterday when the S&P was up to about 39.93, 59.93. Then he talked about, yeah, we're definitely going to put those tariffs on. And oh, by the way, I'm going to add another 10% for China. And effectively, from yesterday's high, intraday high, to the low this morning, the S&P dropped 150 points. So, what I've been saying is my belief is that Trump is far more serious about applying tariffs than he was in 2018. And the markets were underappreciating that. And I think yesterday was a little bit of a wake-up call on that score.
Yeah, it sure was. Now, I mean, let's fast forward to Sunday. What do you think is going to happen here?
Well, March 5th. So it's whatever March 5th is. So 1, 2, 3, 4, 5. So I think it's next Thursday. Like the expiration is March 4th at 11:59, blah blah blah. So I think there's a chance that if progress is made in the next 4 or 5 days on talks, that he may roll it back another 30 days. I mean, that's the environment we are in. If there's not real progress being made, I think he's just going to go ahead and do it and look for maximum pressure to get Canada and Mexico to talk. And I think the big thing, Blake, is that he wants to renegotiate the trade pact between Canada and Mexico and the U.S. that
USMCA.
he negotiated back in what, 2018 or something.
Right.
Yeah. And so I think that ultimately is really what he wants. So if they get talks to where, okay, we'll reopen that and we'll talk about that because that's due to expire at the end of next year. I don't think he wants to wait until next year. Some of the things that have happened is in response to 2018 is China shifted production facilities to Mexico. And then, stuff goes back and forth, but when it comes across the US border, it says made in Mexico, when in reality, a lot of it was done in China. And that's how China has been circumventing, if you will, some of the tariffs. I think Trump wants to address that and tighten it. So, he's going to go through with it. And the only thing that could happen is progress is made. Maybe they agree to open up that trade pact. And he says, okay, they're tightening up on fentanyl, and we're going to talk about this trade pact. And so we get another 30 days.
Well, last week you talked about how you think that, we have to take them seriously, and this is going to be, I mean, this is how they're going to have to pay for things and really make change. It seems like the markets, I don't know if the market sold off on growth concerns or if it was more on these tariff concerns, that maybe everybody's kind of following in line with what you're thinking. But do you think he means business still?
Oh, yeah, absolutely. I mean, they want, I think, significant concessions, and they want the revenue. I mean, the House passed the bill, that includes the 4.5 trillion loss of revenue beyond this year from the 2017 tax cut. Well, how are they going to pay for that? Because they also know and have stated very clearly their goal is to get the deficit down from 6.4% last year to very close to 3% next year. And as I pointed out, that's a loss of $1 trillion worth of spending. That is going to have a negative impact on economic growth. And so I think they're moving ahead as aggressively as they can because the clock's ticking. The midterm elections are 20 months away. They're going to lose the House in all likelihood. So I think that's why we're seeing this escalation. And yeah, I think he's very serious.
Well, that brings us to our first slide, Jim, which you put that it looks like a little lopsided here.
Well, my point is supposedly Republicans and Democrats are living in the same reality. What this says is in their own minds, in their own headspace, they're living in a completely different twilight zone. The independents, I think whenever I see any of these polls, Blake, I look at the independents because I think those people are a little bit more objective and balanced in terms of their take on what's going on.
Sure.
And so you can see, I mean, it's ridiculous, 93% to 4%, it's just crazy. One of the things I want to
Shows
point
you
out.
how separated this country really is, doesn't it?
Yeah, yeah. And so when the Republicans passed that bill, immediately the Democrats, what they do is very well, is they come up with a narrative and everybody speaks from the same platform. Is, oh my God, they're going to cut Medicare to the bone. People are going to, children aren't going to have food. Seniors are going to get kicked out of, I mean, in other words, scorched earth type stuff, because they're going to cut $880 billion from Medicaid. Okay. So it, people have to understand the way they do math. If you and I spent $1,000 on meat last year and we said, we're going to try to get a little healthier, we're going to spend less. Now, you and I would say that, oh, that means we're going to spend less than $1,000. No, no. In Washington, that's not how it works. So what they do is they come up with a baseline for the next 7 years. And so the baseline might include a 5% annual increase in Medicaid spending for the next 7 years. So, what that means is they're cutting spending because instead of spending $1,050 on meat next year, what the Republicans are proposing is we're going to spend $1,020. And so when you stretch out only increasing spending by 2% versus the baseline of 5% over a decade, you get 880 billion. But in fact, Medicaid spending is going to be going up. And during the Biden administration, the annual increase in Medicaid was 9% per year. States like California, New York started to game the system because, and Biden didn't enforce all the rules. And there's provisions in Medicaid that if a state spends X amount of money on something, the federal government will match it with $1 to $3. So what's happened is in California, in 2019, California received, I believe it was 78 or $79 billion from the federal government for their Medicaid program. It's going to be 119 billion this year.
Hmm.
So my point is, unfortunately, to this poll, if you're a Democrat and you hear, oh my God, they're going to slash and burn Medicaid, of course you're going to react pretty negatively. And I think it impacts, independents too. Because unless you understand the way they do math in Washington, D.C., which is completely different than the way you and I and probably most of the people in this country do math, less spending means I spend less money. No, no,
Right.
no, not in Washington, D.C. So I just wanted to point that out because we're in an environment where misinformation is magnified as much as possible.
Sure. Yeah, absolutely.
Unfortunately, I don't think it does anybody any service.
I agree with that wholeheartedly. All right, your
Yeah.
next slide here is about consumer confidence. So,
Yep. Yeah.
what's going on
Uh,
here?
well, what you can see very clearly over the last 2, 3 months, confidence popped after the election, and then December and January, it's been coming down in February, fairly significantly. Why? Well, people worried about inflation, and you look at what's going on in Washington D.C., and it looks a little chaotic, in terms of what Musk is doing with Doge and laying people off and wait a second, some of those people are kind of important. We got to bring them back. So and the inflation thing, I think a lot of people voted for President Trump that had never voted Republican previously because they thought that he would really be able to address inflation. And as we all know, the price of eggs are going up. And for a
Yeah.
lot of people, they don't know it's all due to 150 million birds being killed and so forth, and that's going to continue. They just know when they go to the grocery store, oh my goodness, eggs are up another 50 cents a dozen. So I think this is the confidence issue. And what that ultimately means, Blake, is for people, if you're saying, whoa, wait a second, things seem to be kind of spinning out of control, what do you do with your spending? You pull back. And I think both for consumers as well as for some businesses, that's the near-term risk with all this uncertainty that it almost becomes a little bit of a self-fulfilling prophecy where it's like, I don't know what's going to happen. I'm going to pull in my horns. Oh, guess what? The economy's slowing. And so this week early on, It is what's going on. Also, the economy slowing. The ISM, the S&P Global ISM services dropped below 50. Now, I think that number probably overstates the degree of weakness, but markets are looking at that kind of data point and saying, whoa, housing data, very weak. So we've seen a string of numbers that not only is the uncertainty about Trump and everything else and the trade stuff, but also we are and have been getting some economic data that has been less than robust. So I
All
think
right.
it's a combination of things.
Okay. And speaking of what, your next, you were talking just a little bit about inflation expectations. So
Yeah,
this is your next chart, Jim.
yeah,
And
yeah.
is this all eggflation? Is that all this is?
No, I think it's more than that. I mean, I think most people, and what we've seen is people started buying stuff in December and January in anticipation that tariffs are going to raise prices. So, you know what? Talking about getting that refrigerator or washing machine, I think I'll get it now, instead of waiting until the summer. So people have changed their behavior regarding that. And the eggs, is it contributing? Absolutely. But the point being is I think most people understand just like, wait a second, if they increase tariffs, that's probably going to mean my cost is going to go up. The prices I'm paying is going to go up. And so, bingo, there you have it. So the Fed pays attention to inflation expectations because they worry that if they get embedded, people really start to believe that inflation is going to not just go up, briefly, but over a period of time, behaviors change, and that has an implication for inflation, coming back. So again, these are all the reasons I think why the markets are grappling with the headlines coming out of Washington, D.C. and economic data saying that, wait a second, maybe the economy is downshifting. And it is.
All right. Well, maybe this next chart would
Yeah,
explain
summarizes it.
some of it, but this is a chart you bring up quite a bit here
Yeah,
on
yeah,
our weekly meetings.
yeah, yeah. Economic surprise. And again, the way this is calculated is, economists come up with the expectation for a number, a forecast. When the number comes in better than forecast, the economic surprise index goes up. And conversely, when the number comes in softer, it goes down. It's really a way to gauge sentiment about the economy over the next 3 to 6 months. Because when the data points come in consistently weaker, like we saw last summer, Blake, all of a sudden economists cut back their forecast for future growth, and then lo and behold, the numbers come in better. So, that's the way that thing is calculated. It's important to understand the dynamics behind this number. But this is in part why we've seen Treasury yields come down. And I think in part why the market is at least a little bit concerned that, whoa, wait a second, maybe the economy is slowing because the data
Jim,
is coming in.
I don't necessarily agree with you. I think the whole reason why yields, are coming down is really because you've been bullish bonds. So maybe let's get to some charts. All right. All
Not
right.
bullish enough, though. That's for sure.
Here's the dollar
Yeah, my
index.
take is the economy was going to slow, and ultimately that's going to mean something for Treasury yields.
Right.
But I'm still a little bit on the fence in terms of the impact on Treasury yields as in the tariffs actually become reality. So we'll say,
Got it.
okay, dollar. Last week we talked, I thought the dollar could dip under 106 before it would rally, potentially up to that 108, 108.50. You got to 106.12. I think there's still some more upside here from a standpoint of a knee jerk. That number two relates back to February 3rd when the tariffs were announced.
Yeah.
Big spike. I think I don't think we're going to get a spike like that, but I think the dollar index can trade up to 108, 108.50 if indeed on March 5th we see, yep, here come the tariffs. You know, longer term, I'm bearish the dollar. I think ultimately it's going under 100 and potentially down to 95. So in the meantime, near term, I think the dollar can get a tailwind from Trump proceeding on the tariff front.
All right. So you're still overall bearish to the dollar, but you can't
Yep.
rule out any spikes, especially And you're putting it all
Yeah.
together, Jim, you really do think the Trump administration means business. So if they do, they move forward with these tariffs, this 10% add-on in China. I mean, the dollar's
Yep.
probably going to spike up, but it's more than likely going to fail in your view.
Yeah, it is because ultimately, I think we're seeing the economy downshifting in terms of growth. I think that's going to continue. They do what they're going to do with tariffs. Uh, it's going to have a dampening effect on growth because prices are going to pop,
Yeah.
and people are going to react to that. And the uncertainty regarding trade and tariffs, I don't think it's just going to disappear. In other words, I think this is going to be something in all likelihood that we will continue to deal with because this is going to evolve. President Trump has gone so far as saying that, okay, we're going to start at one level of tariffs and we can keep raising them. Because what we're going to say to companies overseas, hey, you want to avoid that 40% tariff? Just ship your manufacturing to the good old US of A, and all of a sudden the tariff disappears. So if you're one of those over countries, you're a leader of France and Germany and the other EU countries, and here's Trump doing his messaging. Okay, I'm gonna bludgeon you until you move your chemical plant to the US. Are they going to be happy about that? No. So to me, that's why if he goes to full Monty, um, this is not going to go away for a while.
All
So
right.
I think
Well,
ultimately that means people look at the dollar in a negative light. And as an aside, as we've talked, Trump favors a cheaper dollar because that makes U.S. exports less expensive. U.S. companies can sell more overseas. And again, the hope is by increasing production in the U.S., it creates jobs. It's all about trying to create jobs that were lost over the last 20, 25 years in manufacturing, and trying to, what can we do to bring those jobs home? And that's, I think, one of the main motivators behind, the policies we're seeing unfold.
all right, Jim. Well, the next chart, is you often talk about gold, and you've been looking for gold to peak. Is this it? I mean, where's gold going from here?
My take was that we were nearing a high for wave three, and that last week we saw new highs in gold, but the RSI was, recording a negative divergence. And you can look off to the left, back last year where gold, hit a wave three, pulled back, then rallied up to 27.89. The RSI was diverging, and then we saw a very quick shakeout down to 25.41. So my take has been is I think we're near a price high. There's a squeeze going on that, in a sense, is artificially lifting the price of gold. I can't remember if you and I covered it, but I showed it in my
Yeah.
Monday weekly technical review, looking at the price of gold versus silver. This concept of intermarket divergences, where you look at different sectors within it, like in this case, metals, or you look at the Treasury bonds, the 10 versus 30, and stocks, the various market averages. A lot of times near a trend change, you'll see some of the components aren't all in alignment. And so here's silver well below. I think it's about 7% below its high last week as gold was making a new high. To me, that was another reason why a pullback was likely because this intermarket divergence was negative.
Yeah.
So 382 retracement of the rally from 2541 or whatever is around 2800 plus or minus a little bit. So I think we're going to see probably some additional selling. The pattern suggests that one, two, we just saw wave three of five. This is wave four. It implies that there's going to be one more push above that 2955 for wave five before a much more significant high is made. So for me, the upside in gold is really fairly limited because getting above 2955, I don't think it's going to 3300. I think it's going to be around 300, a little bit over 3000, pardon me. And then I think we're going to see a much deeper pullback.
Okay.
So,
All right.
yeah.
All right. All right. Well, let's take a look at the S&P because obviously that's a market's in focus with a lot of people. And, considering the fact, and I'm just going to throw this out here, Jim, you are not showing us lower than these levels means that you think we're going to be supported here. That is my
Yeah,
instant
yeah,
look at your chart. I know exactly what you're going to tell me.
yeah.
We're bouncing. So tell me I'm
Okay.
wrong.
Well, you might be longer term. Okay, so what we can see is on the chart from that high at 61.47, Blake, and this is a 2 hour chart. All right.
Okay.
You can see 1, 2, 3, 4, 5 down to the low that we hit this morning. And based on wave five, we could be 1, 2, 3. The little bounce today is 4 or 5, and then one more dip. All right, that's possible. But the point is, to me, it looks pretty clear you got 5 down. All right, in the bigger picture, what does that mean? Well, the bullish count says that from the high back at 61.26, uh, whatever that was, I can't read the date precisely. That would be January, okay? That you had a 3 waves down to 59.24, 3 waves up to 61.47, and then 1, 2, 3, 4, 5 for wave C. So in other words, what we've done is a big ABC from the original high at 61.20, whatever. That implies that this is the low of wave two, and you're going to new all-time highs. The other 5 down is, all right, hey, that 61.47 is all she wrote. We got 5 down. We're going to get a bounce that maybe gets back towards that 59.93 high that we saw yesterday. And then we're going well below 57.73. So to me, those are the two outcomes. Near term, we're likely to get a bounce no matter which pattern you're following. The bullish is that it'd be wave one of the next advancing wave. The bearish count is okay, you're going to get an ABC bounce or something like that for a retracement of the decline from 61.47 to the low this morning. And then you're going to go down a lot. And obviously, if the tariff thing passes without a whole lot of pain, no retaliatory tariffs. In other words, could we get, also, what if Trump does say, you know what, we're making progress, we're going to push it back 30 days. You could get a hell of a rally,
Yeah.
that would take us to new all-time highs. And then we get to the end of that 30-day window and the shit hits the fan. uh, you know, we got big issues going on, and we can't know the outcome. So to
Sure.
me, again, those are the two paths from a bigger picture standpoint that I can see in terms of looking at the S&P chart.
All right, guys. So what Jim is saying, at least the next day, we might get a little bit of a bounce, regardless.
And it
So
could be a little bit longer than that, and it could be a hell of a lot bigger bounce if, we come Thursday and Trump says, you know what, we're making progress, they're doing some stuff on fentanyl, and Canada and Mexico has agreed to open up the trade pact from years ago, and that's real progress. So I'm delaying the tariffs for another 30 days.
all
You're
right,
going to have a
Jim.
hell of a spike to the upside.
Sure. All right, last chart. This is your TLT. You like to talk about TLT quite a bit. So
Yeah.
what do we
Yeah,
got
yeah,
here?
it's just easier. All right. So, last week I noted that TLT was below the blue trend line, red trend line. So, hey, at that point in time, trend is down. What we got on Monday was the ISM service, not ISM, the S&P services number, and it was below 50. That's what caused TLT to jump over those lines, and obviously 10 and 30-year Treasury yields to come down. The bounce from 84 and change to 94, if you add that to the 86, 86, it comes up to 92.14. So I look at how choppy the move has been. I think you can make the case that there's one more pop from that low from 86, 86. The RSI is starting to get a little overbought or approaching, and if we get one more pop, it probably will be overbought. And I'm still like, okay, the tariff stuff is going to one way either cause treasury yields to go up and TLT to go down because of the inflationary potential that they will hold. Or, gee, if the tariff thing all passes, then the weakness that maybe some people have been factoring in for the economy, oh, well, maybe we're not going to get that weakness. You can see treasury yields go up and TLT come down. So I'm not ready to say, okay, all clear on treasury yields, continue their path down in TLT. What bothers me is from that high at 101.84, you can kind of see 1, 2, 3, 4, 5 down. Okay, that kind of says, we get a bounce, and then there's another decline maybe coming. and we can, point to various things as to what could cause that decline. So I'm on the fence here.
Well, Jim,
I
it's
just
okay
think
to
near-term yields are more likely to tick higher over the next couple of weeks than come down more. But obviously, the news this week are going to really dictate what happens.
well, it's okay to be on the fence. I tell people it's okay to not have an opinion right now. So I mean, if
Well, I
that's
have an opinion. I don't know.
well, Jim, I know what you know is in your technical reviews that you put out every week for your subscribers, and also your macro outlook. You're pretty hell bent on your opinions and ideas, which I can appreciate. So if I'm a trader at home and I'm listening to this, how is the best way for me to get a copy of your work so I can see what it's all about?
Yeah, Jim Welsh Macro at Gmail. You can go to the macrotides.com and take a look at the information that's available there. But in terms of getting something specific, just simply send me an email.
All right. And, I urge all traders to do that. At least shoot out Jim an email. Make sure you tell him you saw him here at Trader Summit. And if you all appreciate Jim's here every single week, give him a thumbs up. Jump down in the comments below. Mention to Jim, or agree, disagree, debate. Jim checks these
I
comments
do, and I respond.
and he responds. So, Jim, thank you so much for spending your time with us. I
Thank you,
appreciate you.
Blake. Appreciate it.
Yeah, and I hope you have a great week. Next week, big week, we're looking into the jobs report, right?
Yeah, I think I might put on a parachute, even though I'm not going to be up in the air. I may fall out of bed. I may fall out of my chair. I might need a parachute.
All right. Well, we'll be. I'm excited to hear you break down the crippling labor market next week.
That's right. We also have a jobs report. Yeah, it's going to be nuts. All right. Stay
Bye-bye.
well. Have a good week.
See you, Jim. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.